edition of Capital Market Live on Channels Television. I'm Will Ibang here in Lagos, and first, let's check in on the markets. We start with Europe, where stocks pulled back on Friday following global momentum as a fresh round of hawkish comments from Federal Reserve officials resurfaced expectations for imminent policy tightening. The UK's FTSE 100 fell 0.28% on Friday, and France's CAC 40 dipped 0.81%, while the German DAX closed lower by 0.93%. Now to Asia, where stocks in Japan led losses in major markets on Friday as the recent rally in the US stocks broke momentum with the Nasdaq snapping a three-day winning streak. Japan's Nikkei 225 fell 1.28% to close, while Hong Kong Hang Seng Index fell 0.19% in the final hour of trade. Mainland Chinese stocks struggled for direction as the Shanghai Composite declined nearly 1% to 3,521.26 points. Now to the U.S., where major bank stocks declined after their earnings reports on Friday, weighing on the U.S. markets as Wall Street notched the second straight negative week to start the year. The Dow Jones Industrial Average slipped by 0.56%. The S&P 500 inched up 0.08%, while the tech-heavy Nasdaq Composite outperformed with a 0.59% gain to close. For the week, the Nasdaq shed 0.28%, while the Dow and S&P 500 lost 0.88% and 0.30%, respectively. Now, back home at the domestic equities market, sentiments were mixed in the second trading week of the year as investors continued to cherry-pick stocks with attractive dividend yields ahead of the 2021 full-year dividend declarations. Accordingly, the all-share index rose by 1.37% week-on-week to closed at 44,454.67 points. More importantly, we saw buying interest in Boa Foods, Dangote Cement, Guinness, and international breweries that drove the weekly gain. Activity levels were weaker than the prior week as trading volume and value declined by 22.4% and 44.8% each week on week. Now, looking at the sectors, you see the industrial goods, banking, and oil and gas indexes posted gains. On the flip side, the consumer goods and insurance indexes declined. Boa Foods topped the gainers chart for the week, while Suno Assurances Nigeria PLC led the decliners. While the trio of Transnational Corporation of Nigeria, Boa Foods, and Jay's Bank contributed 775.68 million shares worth 16.62 billion naira to the total turnover in the week. Now move over to the NASD market, the unlisted equities market, where the Securities Exchange Index closed the week on a positive note. The NASD Securities Index increased by 1.09% to close the week at 702.85 points. Now the volume of trades for the week increased by more than 1,700% to 1.06 million units, while value rose by about 1,200%. NIPCO PLC led two other advances for the week, while Double One PLC and Friesland Campina WAMCO were the only laggards. Meanwhile, Central Securities Clearing System PLC, Friesland Campina WAMCO Nigeria figured among top trades to close the week. Now to the fixed income market, where the bond market was mostly quiet this week with minimal volumes traded across the board. At the close of trading on Friday, the market closed bullish. Overall, average benchmark yields closed at 11.82%, with benchmark yield falling by 0.73%. The Treasury bills market was mostly quiet this week as attention was shifted to the primary market auction, which held this week. At the close of trading on Friday, the market was mixed with buying interest seen for the Treasury bills, while the OMO bills saw selling interest. Average benchmark yields for the Treasury bills fell by 0.87%, while yields on OMO bills advanced by 1.63%. Now, joining me on the show to discuss happenings in the capital market during the week and other events is Mr. Ambrose Amodian, Chief Research Officer at Invest Data Consulting Limited. Good evening, sir. Welcome, and thank you for joining us on the program.
Thanks for having me.
Well, a lot of things have happened in the capital market, especially for the fixed income, the NGX market, which started on a bullish note this year. But we've seen in the second trading week the pullback in terms of misreactions that have happened in the market. What would you say are the factors driving this, especially year to date? How would you assess the performance? What are the key factors driving the mixed reactions? We know that we are expecting the 2021, the Q4 earnings. Why are we seeing this?
No, actually, anywhere in the world, market needs to oscillate to create opportunity to buy low and sell high. But for our market, started on a good note. For market to be on a bullish trend for the first trading week and have a mixed trend for the second week, the market is still strong. As a trader or investor in the market, you are there to make money. Then when there's opportunity for you to cash out, you cash out. In Nigeria here, most of the investors know when to buy, don't know when to sell. But I'll tell you, few of them that are traders now know that when we have made about 20 to 30%, you need to cash out your what? Your profit. What we saw the week under review, as we just said, market was missed but closed positive at about 1.39 for the week, but on a weaker what volume. But it actually means because previous week we saw about 1.2 billion share traded from only Bafu. That's why the previous week we saw much volume, but this recent week is not a drop. But the good thing is that if you look at the volume in transport alone for the week, it says that they are also interested, there. Who have any interest in that transport for now. For me, the trend we saw is a good movement for the market at the first 2 trading weeks of the year. It's not a time to complain. And also, if you look at the history of Nigeria, January has become a month to reckon with as an investor.
I was going to mention that. I said, like for 5 Januaries now, we've had the bullish trend in January.
For this trend now, for the first 2 trading weeks, a positive note, for me, it's a good one. For year to date, we're having about 4.07 against the full year 2021. The market closed with just 6.07. If for the first 2 trading weeks, we're having already 4.0, we tell you that the market is starting on a good note. But policy can come here and there as we go into the year. But the good thing you just said that we're expecting the earnings to any moment from now. The good thing that first earnings that come, the unaudited account will come in this January. For those companies that want to say between now and end of March, they will release their final result will come with a corporate action. But if you know that you're going to release your result within 60 days, that means between now and end of February, you don't need to release the unaudited account for the ended 31st of December. Or it's a new law or a new rule in NSE. If you know that result is coming, for example, now a company like MTN, UCAP, Zenith Bank, they don't release unaudited account within the first month of January because they did not before the end of February, they release the result that comes with a corporate action. That means it depends on your own as a company what you choose to do. That okay, let's release our unaudited account that comes with unaudited for full year, but we are targeting to release the 4th quarter of the year because every quarter you have just 30 days to release your result at the end of every quarter.
Are you not scared that this is going to scare off probably possible potential investors who are looking to see that, should I invest in this company? What if they don't see anything to spur activity or interest?
I like that question. The good thing is that in the last 2 years, 2020, this new rule came on board. 2019. When the first year it came on board, when earnings was coming in the month of January, no dividend, market panic, it lost almost 8% for that January. But when it's a new law or a new rule in the market, the next year, 2020, you see, everybody understand that this result will come for January without dividend. But before the end of the first quarter, dividend will come again. But for those I just said earlier that has to release between end of February, will come with dividend. That's what changed the market. That in 2020, 2021, you saw January gaining more than 5%. And that is the trend we're already seeing in 2022. That January is still maintaining. Before this part of the world, we said January effects that want to pay school fees, want to do this one, people want to scare away from the market. But the sentiment has changed to be positive now. And every investor wants to push January as his positioning even from the month of October the previous year, that I can sell my position to January, I can cash out and come back again because they know that January will move up because of the new trend. Because that period we're expecting earnings to come. Anywhere in the world, either in the long term or the short term, earnings has impact on price. And when you see earnings, it tells you what your company, where you invested, what they have done. Not like we send our children to school. At the end of the term, they come with a report card. This is what I've done for this term. Every company has 3 months to tell us this is what they have done for the quarter. And they expect that for the end of December 31st, we need to see the card for the last quarter. That's what we are expecting.
So you say that's why we didn't see Santa Rally last year. Basically, I think that's the January is our Santa Rally.
Yeah, so, the January is part of it.
We saw that the consumer goods sector for this week was the hardest hit. It fell, I think, up to 4% lower than what happened with the consumer goods sector, because we're looking at the manufacturing companies here now. Okay. So why was the consumer goods sector hard hit for this week?
If you look at the numbers that came for that third quarter, they are missed numbers, and I tell you that they are also encouraging. But when you see the high cap stuff in a sector or industry losing, it's going to affect the index. You know that the same last week we saw Nestle gaining almost 9%, and Nestle also within the week under review dropped. That's why you saw that almost 4% because the big cap in that index has suffered loss. That's why it's not that there's a negative information for the consumer goods or the manufacturing sector. It's not because the big boys, or I call it the big high cap, have suffered loss. When they gained the previous week, we saw that about 5% was recorded for consumer goods. But now that also that same big giant in that sector suffered loss, that's why we saw the decline. For me, there's no anything to panic about. But just hold on.
You should just wait and
Because
watch
we are
and see.
seeing the numbers. We have seen the number already. Telling us where we should position what for dividend. Because most of them going to show you that yes, we have done well for the year, despite that policies of government are not too favorable. But most of them are able to maneuver their ways. If you know that you have done backward integration, we are not importing your raw material. It's going to rise your cost of production. For those that are importing materials, it's going to affect them because then for that, most of the companies that consumer goods, they know how to play their game. That's why you see, despite we're complaining that prices of goods are high, most of them are posting positive number. It's okay. Some of their goods are still in the shelf. They are still positive number. That's their way they are doing. For me, it's a good way of doing that. Our managers in NSC or corporate managers in Nigeria, they want to understand the business they're operating. For that, you can see the way they are marshalling for decision to make sure that they are still moving. That tells that it's a good thing for us.
Okay, so talking of positioning and try to get ahead for dividend yields, we saw companies, manufacturing companies. Let's look at some of the manufacturing companies now. We have Dangote Cement, which had some big earnings. They, the profit margins we saw that is really huge, and they had their Q3 earnings were really good. So do you want to talk about? Do you want to walk us through that and see, especially for Dangote and some other companies like that? We saw Boa Foods, Boa Cement. What are these companies and how they? Will you talk about their Q3 earnings and the positioning for expected outlook for the full year?
I agree with you. So if you look at, you just mentioned Dangote, let's start from Dangote. There's also recent news in the market that Dangote is doing a share buyback. And that is that company is positioning itself as one of the best company in Nigeria. And you look for what we call the best practice all over the world. So look at the big names, in matured market. This is a company owned by Warren Buffett, Facebook, Google. They've done a lot of buyback the previous year, 2021. But they're trying to show that they want their price to remain within the fair value of the company. That's why they are being buyback, so that the price will go below their fair value to bring that range, and at the same time creating wealth for the investor. Because if you are buying back your share, that means you are reducing the share in issue. That's going to impact your earnings at the end of the day. As they buy back, they go to cancel the number of shares they are buying. Automatically, the earnings become better, and that will support the wealth they want to create for their shareholders. For me, it's a good decision. But going to the numbers of Dangote for third quarter, this is the first company that sector to post almost a trillion turnover for the year for third quarter 2021. For a company to be posting trillion as turnover, I tell that they are doing business. And go to the bottom line, about 280 something billion profit again. And for me, if you look at their payout, the previous year 16 naira dividend, and with the earnings about almost 19 naira, EPS for third quarter, I expect that at the end of the day, they are going to get 20 naira from their EPS and they pay you 18 naira or 20 naira. It depends on what they decide. But for me, if you really want to build your portfolio for defensive stock, Dangote should be your portfolio as an investor because it will pay the value for you.
Now let's look at Boa Foods. They're newly listed, but they've done so well. They closed this week about 16 naira when they listed at 14 naira. So would you examine? Let's assess their earnings for Q3 and see. But I don't think they didn't post any dividend in Q3. I think maybe because they just listed.
Well, if you look at the number for Boa Food for third quarter, I'll tell you that number is I call it prepared number, or let me use one funny language, a cook number.
A cook number.
Well, that number, because when you are going to marry a lady, when it's coming to you, need to dress herself to look beautiful. Okay. And they're coming to the market to list, you need to put their number in order to present to the public that we are Boa's Food. And for that, I want to wait until I see a subsequent number to know real position, because if you are giving me your prepared account for listing, it's not for me to judge you, because during Christmas people want to look good. Now they are coming for listing, they need to look good. That's why that number was packaged for to attract investors. Okay. Subsequently, I will now know whether this what we saw at the first one is a trail of what we are seeing in the future. That's why I will talk more on their number, because if you say a good number, they have the highest profit margin, about 40% profit margin. I laughed. On the good, they have an EPS of about 4 naira 39 kobo for third quarter ended in November. For me, that number is not what we need to judge them down. Yeah, the price moved from 14 naira to 16 naira because of what the sentiment, the market for new listing. As expected, and after I made about 40%, 20%, 50%, people start taking profit. It slowed down towards the end of the week. Getting around there, that 2%. But before we were doing almost 9%, 10% every day. But towards the end of the week, people start taking profit, slow down. We want to judge the company when we do a subsequent number. This person is not for us to judge them, but we are good at. I welcome the market because they are putting on that space for people to have choice of where to put money. And also, it makes BOA become more corporate, corporate governance and climate. At the same time, more transparent. For that, it's a welcome development in the market. Good to say kudos to NSC and what's it called, BOA for coming on board. It's a good one.
Okay, we'll just continue after this. We'll take a quick break now, and when we come back, we will continue the conversation. And that's the moment Welcome back. If you're just joining us, this is Capital Market Live on Channels Television, and the securities during the week, this week, the Securities and Exchange Commission says it's set to launch a revised version of the 10-year Capital Market Master Plan this year. And a statement issued by the SEC says the revised version of the policy aims to reflect the dynamism of the capital markets and developments in the financial technology, among others. Now, Mr. Ambrose, we see that the SEC says that the revised plan is to attract more investors, to spur market activities. Do you see this really doing what it says it will do? Because when it's implemented, we're going to see a lot of developments in the market.
Yeah, for me, revisiting the master plan is a good and welcome development for me, because if you look at a good plan, your long plan should be 5 years. Within that 5 years, you break it to what? To short term and all those goals to attain that 5 years. But for good straight 10 years plan, it's so good, but let's see that, see what they achieved in that 10 years plan. I think it's good that they are coming out to review it so that they can move faster and adopt the new things that are happening in the environment globally. For me, if they are going to do this, they need to look the area of what? Of investment education. That's the first place they should look at. In Nigeria, we see a population of about 210 million Nigerians who have less than 5 million on the capital market. General, not only stock market, general capital market. Tells that for me, the NSC, SEC have not done their job. NSC have not done their job. CBN have not done their job, because if the population of 210 million Nigerians was still less than 5 million invested money, what are they doing with all the plans, all the money they are putting in education? That means if now they are woken from sleep, they really want to just come back to review the plan, they have to start with, first of all, deepen the market. Attract more participants in the market, because we're having low penetration because we have weak investors education.
That's what they said the master plan is set to do, to deepen the market and attract more to woo investors, especially domestic and foreign investors. So have you gone through the plan? Have you read it, and do you think it is capable of achieving this?
No, I think they are planning to call for the review. They've not done the review. The review is for them to deepen the market. And to the market, it's not just bringing products alone. The product, people have to buy the product in the market. That means you have to start from the first one is attract more people to the market, deepen the market, let them have more penetration to the market. Because if you have education, you can invest wisely. But if you have education, you see other alternatives you want to look at, because you don't understand the other side. That is why if there's 1 and 2, you don't understand the one, you go to anyone that you see. Then if today we're having low penetration in the capital market, it tells me that there's other things they are looking at. That is why before now I said that the positive scheme have been on a high rate, development. Positive scheme, if no one close today, another one open the next day, because they are taking another story entirely. Who the story the capital market in Nigeria or the SEC or NSC has failed to tell those public about what investment, because giving people getting more involved in a public scheme, it's also a high risk for people to invest in equity or that, because they see it as alternative. But now that we're seeing those policy schemes has really soaked a lot of billions, people have lost even their savings for that. Let's start telling them another story entirely. They need to understand the role of capital market in their life, the role of capital market in growing their wealth, because capital market is meant to work to create wealth for people. But if they don't understand to take up opportunity in that market, they look for alternative. And they for that, they need to start from that investment education. Today, crypto space is expanding. Despite that, in Nigeria, we don't have a custodian that is residing in Nigeria here. One of the crypto currency, or anything residing in Nigeria, but we have millions of Nigerians playing it, both investing in it, both educated and uneducated playing it. That means there's something they're getting there. That means they have information, they have knowledge about it. That means let's also take the simple knowledge to our local investor, what they will give from capital market. If we do it well, it's not the time for saying let's be for SEC alone. It's for time for SEC to do a cooperation with market operators, other stakeholders in the market, so that they can have a plan on how to develop the market, like the investors' education. Let me tell you one thing. The way you train a stockbroker, like have a CIS, it's different from the way you train a man that's on the street. Okay. The man that's doing Marwa, the man that's doing Okada, the man that is the driver that have, but it's not the same platform you use for them.
So you'd have to probably go to the grassroots, maybe break down the education program.
The system that, you failed this year. That is why they need to do collaboration with both the market operators, the stakeholders in the market, in the industry. Let's take this education to the doorstep of these people. When they understand the market, they come back. Also, when many of them lost money when markets crashed, most of them are still not in their own. But in this same market, people have made more money even than what they lost because they didn't come back because they lost money. But if you are going back to the test, so this is why you lost money. Because I tell you, if an adult is running and an adult fall, you want to know why he fall. If a child is running, it does stand up and continue. Then now, if you have lost money, it's the time for them to come back. This is why you lost money, and this is how to do it right. And now I'll tell you that technology has made the market more transparent. Because if you really want to check some assets in the market, technology is the easier way to do it. And this technology has no ban, has no limit. That means anywhere you are, technology can figure out. That means it's time for them to employ technology. We have a lot of fintech businesses, and it's for them to integrate them to the investment education. Then they use that platform to reach out. Because if you are, for example, okay, NSC say they are doing investors education on Zoom. The man that is on the road already at the time of Okada, does he have time to join us on Zoom? No. That means there is what we call another mainstream media for them, social media for that people. Then reaching out for all of them. That means you need to take the kind of market you are and not find what suits that segment. And that means today say you are holding investor education, everybody is going live on Zoom. No, it's for journalists like you and I that want to join that kind of demand. And you don't know. That means you need to fashion another way of teaching those guys about the market. That's why if you want to really deepen the market, you need to attract more people to play. Because a population of 210 million Nigeria will have less than 5 million. For me, it's an aberration. We need this time for us to do a lot of work to educate Nigerians. And of course, this market will create wealth for Nigerians. It's because they don't understand. That's why they are running. People that are making money there, they don't want to leave the market because they are making money. Let's tell them to come and join us and make money in that market.
Now, one of the sectors that is targeted to drive growth in 2022 is the agricultural sectors. We talk of commodities, maybe different, could be crude and everything. So, how are investors, especially the SEC or market players, trying to educate people on playing in the commodities market? Because I think one of the plans of the master plan is to educate people, to create workshops where people learn how to trade on the commodities exchange ecosystem, to trade in that. What do you think should be done to encourage more trading in commodities? Because people are just doing trading in probably futures or things like that, or in the commodities space.
Thank you.
There's a lot going on there.
Thank you. Even the general market, or say capital market, it covers both commodity, stock, future, derivative, everything is under that capital market. If you really want to do education, there are people that will take in education for what? For equity. Those that understand, derivative, do derivative for derivative. Those that understand how to do commodity. So that people have I call it a wide investment windows to put their money, so that you can manage your risk very well. But when you're playing only equity, you don't understand bond, you are in one-sided map. But if you understand bond, you know how to diversify some of your money in bond. That means the truth I'm talking is holistic. But I'm telling you, you can't go and tell the man that has only 5,000 to talk about bond. No, you need to go and come and invest in bond. That's why I said this kind of investment should be tailored to people for different purposes. You see banks playing bond, why? Because they have the equipment to play the bond market. But yes, there's savings bond today. Say invest 5,000 naira, you get. If you invest 5,000 in bond, how much bond? If you invest 5,000 in equity, you get more return than putting in bond. Unless you don't want to take risk. Yes, we know that there's more risk in capital market than compared to bond market. But if you want to make good return, take calculated risk and make money in capital. It's all about putting this education to suit different market and attract people to take this education. This will let you understand it. I tell you that the way I will teach the man on the street, not the way I will teach somebody that working in stock broking finance in their research team. No, the man on the street or the children. Like for example, I know that NSC has a comic for school. Comic is a long-term project. Because those children, they have to go to primary, secondary school before they come. But this money that is flowing within the people that are doing Okada, Marwa, every day they earn money. Where are they putting the money? Either they see one person they are putting money. At the end of the day, they start complaining, I saved 100,000 naira, and the year it has gone. Because they don't know that there's where they can identify with something like identify with Dangote, identify with MTN. You know that it's a product identify with them because this is the company that are listed, they are regularly paying dividend. Then why are you not putting your money? Because they don't understand. Nobody will tell them, this is what we make from here. This is what we make. That thing is what they want to hear. Let me tell you, if you are telling me that I will make money somewhere.
Are you sure that it's not because of the rich reward that they're going to get from the Ponzi schemes, that attractive yields that's driving them to that? Because if you look at equities, and it's quite, if you tell me I'm going to earn 1 naira 50 kobo for the share that I bought, it might not sound so attractive. So that education you're speaking about now, how do you tell them? How do they, come in and they are convinced to put their money in it?
When you know that you make 10 kobo in a thing, and you make 10 kobo, 10 kobo, 10 kobo, 10 kobo, if you know how to do it well. But when you make 20% in a day or in a week, the next day you are not sure that 20%, where do you prefer to go? It's because I don't know that I will make 10 kobo, 10 kobo, and that's why I'm not looking this way. I'm looking where I will make that 20%. And the next they say that 20% has gone. My capital, everything has gone. But if I'm here making 10 continuously and my money is there because you have other value on it, nobody invests in stock, whether it's price only come down and go up. In positive, when they've gone, they've gone. Your money has gone. But in capital market, you only buy when the price drop. You still have access under below it that this thing has dropped from 2 naira to 150 kobo. But you have not lost everything. You can still wait, and that's why actually it's all we need to tell them. Let's tell them what they need to hear. Because for example, now let me just give you a shock. In 2021, the whole market returned about 6.07. The whole NSC. Yeah, there's some stocks that give 100%. But in our invest data, where we give our what we call 10 golden stock for every year, the 10 golden stock deliver 53.29 for 2021. Why the market itself deliver just 6.7? Let's say that if you have that information and be in the right stock, you make money. That's what they want to hear. Not just telling me, don't invest in a positive skill, it's dangerous. So what else you don't think the alternative where I should put my money?
Okay, Mr. Ambrose, just tell us a quick one to just what stocks should we watch out for this week? Just very quick. 3 stocks we should watch out
for me, I would say
the next week.
Next week, not for dividend purpose. Look the way of Access Bank, look the way of Zenith Bank, look the way of Dangote Cement for dividend. And for capital allocation, I want to keep quiet. But for dividend, look the way of these stocks.
Okay, then I will have to leave it there. Because one can't really dissect, the capital market in 30 minutes. But a lot to be talked about. Thank you so much, Mr. Ambrose, for coming on the program. Mr. Ambrose is the Chief Research Officer at Invest Data Consulting Limited. And that's a wrap on Capital Market for today. I'm Will Ibong. Thanks for watching and stay safe.